Hello, everyone. Welcome to today's Charity Village webinar. We're going to get started in just a moment. We just want to make sure that everyone gets a chance to join here today before we kick things off. And I can see we've got folks coming in from all across the country today, so it's great to have you here with us. We really appreciate you taking time out of your day to spend this time with us. So I know we have a lot to cover today, so I think we'll go ahead and kick things off. So again, welcome to today's Charity Village webinar. My name is Marina Dawson, and on behalf of Charity Village, I'd like to thank all of you for joining us today. As we are gathering here on a virtual platform today, it is important for us to acknowledge that each one of us is joining this webinar from the ancestral or unceded lands of the Inuit, Métis, and First Nation people. I'm speaking to you today from the traditional and unceded land and territory of the Coast Salish people, specifically the Snuneymuxw First Nation. And as an uninvited guest, I wish to humbly express my gratitude to the Snuneymuxw people for their ongoing stewardship of these beautiful lands where I live, work, and play. Before we start today's webinar, I'll just make a few introductions and quickly run through some housekeeping items. Now, for those who might be joining a Charity Village webinar for the first time, Charity Village is Canada's largest online job board for the nonprofit sector. In addition to our online job board, organizations can also post volunteer positions. So if you're looking for work or to recruit talent in the sector, Charity Village is a great place to start. We also have a lot of excellent resources for nonprofit professionals, including online courses, articles, fundraising tools, and free webinars like the one we're presenting today. And before we start today's webinar, I'll just quickly run through some housekeeping items. So you may have noticed when you joined the webinar today that you were automatically put on mute. Since we do have hundreds of participants joining today's sessions, it's important for us to minimize the amount of background noise so that everyone can clearly hear the presentation. You can, of course, still ask questions and make comments. Just do that with the question box, which you'll see at the bottom of the Zoom control panel at the bottom of your screen. We will take questions at the end of the webinar today, so just submit them as you think of them, and we'll do our best to get to as many as possible. You can also email your questions to webinars@charityvillage.com if you're having any difficulty with the Zoom control panel. If you happen to encounter any technical issues today with the webinar, either viewing the presentation or with the audio, please do let us know in the question box or by sending us an email. We'll do our best to get all technical difficulties resolved as quickly as we can. But in a worst case scenario, just remember that we're recording today's webinar, and we will send you that full recording by email. And that's probably by this afternoon or tomorrow morning. If you do get called away or disconnected for any reason, you're still going to be able to view the full presentation afterwards. So with that, I'd like to welcome our presenters for today. We have Christine, who's the director of the NPO division at Enkel Back Office Solutions, and Shirley, who's senior controller at the company as well. So I think we're going to, if I'm not mistaken, turn things over to Shirley to kick things off.
Well, thank you very much for that introduction. Christine and I just wanted to take the opportunity to introduce ourselves. So as you mentioned, I am Shirley Wolf. I'm a senior controller at Enkel. I'm passionate about working with not-for-profits and helping them with their business and financial reporting needs. And I serve on a number of not-for-profit boards, finance committees, and also a governance committee. I'm going to hand over to Christine. She's going to introduce herself to you, and she's going to kick off the presentation today.
Thank you, Shirley. So my name is Christine Kesser, and I am the director of the NPO division here at Enkel. I've been working in the nonprofit sector specifically for decades. It is where my heart is, just like Shirley. That is where my passion lies, both in public practice years ago. I've been an executive director of a nonprofit and really enjoy working with our nonprofit clients. Let's get started with our webinar. First, I want to tell you a little bit about Enkel. We're based in Vancouver, BC. We work with over 100 NPOs and charities across Canada. We have team members from coast to coast as well. We provide outsourced bookkeeping and accounting services. We'd like to take this time right now to acknowledge that our offices are situated on the unceded traditional territories of the Musqueam, Squamish, and Tsleil-Waututh nations. Our agenda for today is all about how we can mitigate all of that uncertainty around the temperature of what's going on financially with our nonprofits, where interest rates are headed, all of those things that might be on your mind right now. We're going to be setting the stage first. What's the current situation and how is it impacting nonprofits? How it may impact your nonprofit down the road? How do we prepare for that uncertainty? We're going to talk about understanding and building a cash flow plan. We're going to do a deep dive into expenses and take a closer look at personnel costs, salaries, wages, etc. Insurance considerations and continuity plans. And then we're going to take your questions. Throughout this webinar, you are encouraged to ask your questions in the Q&A section. Please ensure that you add your email address to your question if you'd like a follow-up of all of the questions that we couldn't answer during the webinar. What we do is we send out the questions with our responses, but we do need your email permission in order to do that. Let's move on. Well, we're going to turn it over to all of you with a polling question. So on a scale of 1, which is pretty chill, to 10, which is very stressed, rate your level of stress as it relates to the changing economy and uncertainty around where things are headed. Thanks to everyone who's answering. We're going to give you just a few seconds to give everyone an opportunity to have a voice here. But it really does give us, Shirley and I, a really good indication of, as we're presenting this webinar, how everyone's feeling. So we've got 70, and I'm going to, I don't know if you can see the results yourself, but we've got about 75 out of 200, so about 38% say that they're about a 7, 8 out of 10. And that would be our highest response. So Shirley, I think things are exactly where we thought. Sort of from that median to 7 and 8, we do have about 12% people here at the webinar who are feeling a 9 to 10. And only 2% of people are in that chilling out category saying, no, things are okay. So I'm glad you're here. And hopefully we'll be able to help ease some of that anxiety and stress when it comes to the economy and uncertainty. Let's first set the stage. First thing we want to do is talk about some common terms related to the economy. So when you hear these, sometimes they can be confusing. The first one is gross domestic product. And it is basically the total of all goods and services produced within the boundaries of Canada. A recession, which is a word none of us like to hear, is a period of temporary economic decline in which trade and industrial activity are reduced, generally identified by the fall in GDP in 2 successive quarters. So 2 quarters back to back. The employment rate is the rate at which people in the country are actively searching for employment, but are unable to find work. Let's talk about our current economic indicators. Most are calling for a mild recession in the middle quarters of 2023. That's sort of where we're headed now. Interest rates are up and may climb higher. I don't know if everyone knows the number of times that the Bank of Canada interest rate went up last year. Can you guess? If you said 7, you were right. 7 times last year and once this year. So when we say interest rates are up and may climb higher, absolutely. Household disposable income will shrink with the higher cost of debt. People are really feeling those interest rates. Consumer spending is likely to slow later this year, which obviously directly affects business. And unemployment rates are likely to drift higher by early 2024 as businesses mitigate personnel costs and try to see how they're going to handle a possible dive in consumer spending. So how does this affect a nonprofit? Well, nonprofits are really unique because unlike a business who might be feeling less traffic, nonprofits are often feeling a higher demand for their services during these times. But at the same time, you might be feeling a decrease in donations, higher operating costs, and volunteer shortages, which continue to be a significant issue. The CBC reports that up to 65% of organizations in the country are struggling with a shortage of volunteers. So if this is something that you're feeling right now, you are definitely not alone. Stock prices and investments will likely be squeezed. And they're predicting a 60% increase in a demand for food banks and other charities. And a lot of our clients and people that are here in this room are really feeling these effects. We're going to turn this back to you right now with another polling question. Has your particular nonprofit started to feel the effects of the economic downturn? So it's just a yes or no. And that can be in any of those categories that we talked about or other areas. Currently, I'm seeing 79% of people are saying yes, quite common. There is a direct link to the services that you provide and the additional services that people require during these times. Thank you so much for participating. It helps us a lot. So this is what we came for. How can you better prepare for what's coming? The first thing that we're going to talk about is how to understand and build a cash flow forecast. What is a cash flow forecast? And when we talk about cash flow, in the years that I've taught accounting, one of the things that I have asked my students is, how is it possible for, say, a company to have $1 million in sales, but $50,000 in the bank? How is it possible for a nonprofit to have revenues this year of $2 million, but have $50,000 in the bank today? And that answer is cash flow. For a business, it would be accounts receivable, just waiting to collect on those sales. For a nonprofit, it might be what your funding agreement stipulates as to when you're going to get paid. Think of cash flow as actual dollars coming in and out of your agency. So not revenue and expenses like your statement of operations. This is actual cash. So it shows the expected cash inflows and outflows over a period of time. Projects, potential shortages and surpluses, so you can plan accordingly. And this helps you make more informed decisions. So when you forecast your cash flow and say, you know, in July, this is the cash we're expected to bring in, and this is the cash that we are expecting to have to pay out, you can identify early where there might be a shortfall and what changes need to be made now so that there are no potential issues months down the road. All right, let's talk about, sorry, my screen is not showing the title here. So let's talk about the foundation. Now, we're not going to talk to you about the details of preparing a cash flow plan. We're not going to prepare one for you, but there is specifics in this blog post. And like we've said, you will get these slides at the end of this presentation. So feel free to follow the blog post and read more about cash flows. What's really important is to have up-to-date bookkeeping. It's key to being able to use a cash flow forecast once it's built. Like I was saying about knowing what your payroll expenses are in 2 months, and your utilities and your rent, and knowing what cash is coming in. In order to know what those numbers are, your bookkeeping has to be up to date. You need to know what actually happened in the business to compare the actuals to your forecast. An approved budget can be a great starting point for a cash flow forecast, especially when we're talking about what are we expected to spend in the next 3 to 6 months. If we look at your approved budget, it gives us a really good starting point. So what is the difference between a cash flow forecast and an approved budget? This goes back to the question of how can you have $50,000 in the bank and have $2 million in revenue? The budget is based on that revenue. It's based on the income, which is not necessarily cash today. And so it may not align with the cash coming in and out at a given time. So if I'm looking at May 25th, my cash flow might be completely different than June 25th. And I need to be able to know what those differences are. The approved budget will follow revenue recognition principles and will not necessarily align with cash received from funders, for example. The approved budget will include accrued expenses, so any expenses in the period they relate to, rather than when the cash leaves the organization. So the cash flow would really show when you actually pay the bill. Now, these are the steps that are critical for building a cash flow forecast. The first thing that you want to do is collect your financial information. You really need to be in the know to be able to do this correctly. You need to have a really good indication of the cash that you're expected to collect and the expenses that you expect to pay from the lens of cash. Then you want to categorize your income and expenses correctly, different programs, different classes, and you want to estimate your income and expenses for the upcoming period. And again, this isn't a cash flow forecast, isn't a report of income and expenses, but you need to know what income and expenses are expected for the upcoming period to be able to judge cash flow. You want to identify your cash inflows and outflows. And that is exactly like it sounds. In our pockets and out of our pockets. When we're paying out cash and when cash is coming in, deposits versus checks, etc., we need to identify those numbers. And then we calculate the net cash flow. That's what's left over. Once we've received our cash for the month and we've paid out what we need to pay out, what's left? That's the net cash flow. And then you want to update your cash flow forecast regularly. Things can change. You might have just tapped into some new funding that you're going to receive in 3 months. That's going to make your cash flow look different. You might have hired someone new and they start next week. That's going to affect your cash flow when it comes time to paying out payroll. So you want to make sure that you're updating the cash flow forecast regularly. Now I'm going to turn the presentation over to Shirley, who's going to talk to you about doing a deep dive on your expenses.
Thank you, Christine. I thought before I would start on the topic of expenses, that we'd perhaps just have a look at revenues as well. As Christine said, as you look at cash flows, you're focusing on those key inflows and outflows. And of course, one of the main inflows of cash for a not-for-profit organization is your revenue stream, and your main outflows would be your operating expenses. With respect to your revenues, you may want to be creating a greater level of certainty during a period of uncertainty. And so it's a good time to have a close look at your revenue streams and see what opportunities there may be for you to expand your existing revenues, or to perhaps be earning revenues that you haven't previously earned before. So perhaps taking a look at fundraising, there may be opportunities for you to hold fundraising events or to otherwise launch campaigns that will help you increase your unrestricted donations coming into your organization. You may have been applying for grants in the past, but there may be opportunities to apply for more grants and to try and increase that revenue stream as well. Many funding agreements that are entered into by not-for-profit organizations are one-year agreements, but you may have the opportunity to speak to funding organizations, perhaps particularly government funders, to see if there's an opportunity to enter into a longer-term agreement, such as a 3-year agreement. Many organizations are struggling to make ends meet with respect to funding, both from the perspective of their program expenses and also their administrative expenses, given the increase in inflation that we've experienced over this past year. So it's also an opportunity for you to open up the conversations with your main funding organizations and seeing whether there could be an adjustment to your revenues for the next fiscal year. But let's turn now to expenses, because of course that's going to be an important area of focus for you. And in this next section, we're going to be talking about some of the tools and opportunities you have to better prepare for the current economic environment and what may be coming. So tackling expenses can be daunting, and for this reason, we think it's best to look at expenses in these 3 buckets, being short-term operating expenses, discretionary costs, and long-term fixed costs. Of course, payroll is also a very significant expense for a not-for-profit organization, and we're going to be looking at that separately a little later in the presentation. But we feel that categorizing the expenses in these 3 categories makes sense, because your approach to minimizing and optimizing the costs will be different based on which of these 3 buckets your expenses fall into. Those set it and forget it expenses can be dangerous, and that can often be the best place for you to start. So questions you may want to ask yourself is whether you have technology that you're paying for but aren't actually using. Also, whether there could be duplicate functionality, such as using both Google Meet and Zoom. You also may want to consider whether there could be free versions rather than paid versions of software such as Slack and Zoom. And also really take a hard look to think about what is essential and what is not for your business right now. Often we get complacent in the way we work, and change can be hard to introduce to an organization. Really, in times of uncertainty, we can't afford to be complacent. Also think about certain tools where you pay on a per head basis. Is it possible that you have accounts open where you no longer have people in your organization? So perhaps you haven't deactivated a former employee's Slack account, or you've kept their email account open so as to ensure that any critical correspondence coming in after their departure is not missed. But think about whether any of these accounts are still lingering. And this is really a good time to take stock and make sure that you only have accounts open where you need to. Also think about what costs actually lead to your revenue generation or are critical to executing on your mission. For example, project management software can be very expensive, but do you actually need it in your business or in your organization at this time? Can you go with a lighter tool at a much lower cost that will help you achieve the same outcome? The next slide has a very good example as to why you shouldn't just accept the status quo. So recently we were helping one of our clients through some challenging economic times, and we did a session with them to review their expenses, focusing in on those set it and forget it expenses. The client uses the Google Suite, but they also were using Zoom. And we noticed under their Zoom subscription that they were paying for 1 seat for each of its 17 staff. The cost was $14.99 per employee, and adding to that $28.78 in total in taxes. And of course, Zoom is a US subscription, so we have to consider the exchange rate to translate that cost into Canadian dollars. And it was 1.7375 per their credit card. So all in all, this amounted to a monthly cost of $389.96. So they had an opportunity to save almost $4,700 on an annual basis just by canceling their Zoom. We did ask them why they had both Zoom and Google Meet, and they felt that Google Meet was not nearly as good as Zoom. That may have been the case at the beginning of the pandemic, but arguably, unless you're looking for advanced functionality, Google Meet really did meet their requirements. So we're now looking at the discretionary cost category. And what do we mean by tackling discretionary costs? So this is a time when you need to think about your policies around meals and entertainment, business lunches, Christmas parties, and client engagement. Ask yourself what really is essential. While you don't want to make compromises that affect your organization's culture, you do want to strike a balance. If staff understand that you're trying to manage expenses over the long term, chances are that they will buy in. And this is especially possible where employees are engaged and buy into the mission of your organization. So we suggest you rally them behind the idea that you are trying to improve the ability of your organization to serve your communities and expand your impact. So the last category are the long-term fixed costs. And these can be inherently hard to deal with. If you're locked into a contract, you may have limited flexibility. But that said, it's not to say that you don't have any options. If you're locked into a long-term lease for an office or other facilities that you're renting, you can consider subleasing. Or you could explore subleasing just a part of your office to another not-for-profit organization, or perhaps a tech startup or another small business. Many of our clients are finding that they still have value in an office, even now with teams still working remotely. Offices can be a great place for central team gatherings and collaboration. And that said, fixed desks may no longer be required, so perhaps you could do with less square footage. There may also be an opportunity to negotiate the terms of your lease with your landlord and to explore more affordable locations when your lease term ends. There are many innovative ways that not-for-profit organizations can reach their donor base in a more cost-effective way, and thereby reduce some of the fundraising costs. Perhaps it's time to reconsider the traditional mail-out programs and move towards digital communication only. Also, CRM tools will allow you to keep a better handle on your member base and their donation behavior. And the cost of acquiring new donors is high. So why not focus on expanding donations from your existing donor base? It's also a good time to consider program efficiency. Many of our clients are looking at their activities and thinking that this might be a good opportunity to double down on those areas yielding the highest impact in the most efficient way. This can also allow your organization to become more focused and to develop greater expertise in certain areas, further improving the impact that you're making to the communities you're serving. You may also want to ask if certain activities would be best undertaken by another organization. Perhaps the best option is to facilitate a transfer of certain programs or activities to other organizations where there's a better fit for a program of that particular sort. We're moving now onto the next slide, which is looking at other expense reduction opportunities. So outsourced services may be an opportunity to lower operating costs. If you think about non-core functions like technology and accounting in particular, outsourcing these functions may allow you to bring in experts to deliver high-quality services at lower prices. Outsourcing such services may reduce management overhead for these activities, and that'll allow a freeing up of time and effort to focus on those things you really want to focus on that are tied to the mission and the goals of your organization. You may also want to think about how you can engage volunteers rather than paid employees to support certain programs. Christine did mention that the level of volunteerism seems to have dropped. So this may require some more innovative thinking in terms of how you can engage volunteers in a way that they will feel comfortable. Are there people in your community who are committed to your cause? Are there people who've been impacted by the work that you do and want to have that opportunity to give back? We also recommend getting into the details of your employee benefit plans. You may want to consider conducting a survey for your employees to see what those team members really care about. Your benefits provider can also share some insight on which components of your extended benefit plan are used the most by your team. And shopping for more competitive rates is an option, but over the long term, rates tend to rise. Often we've been seeing insurance companies increase rates considerably in the second year, so do be aware of that. So we're now shifting our focus to personnel costs, which, as I mentioned, for many of you, represent the highest overall spending area. Amongst our not-for-profit organization clients, we typically see approximately 50% to 66% of total expenses related to personnel. Now, of course, people are the lifeblood of any organization, and particularly for a not-for-profit organization where you are providing services. So it's important to keep in mind that any decisions made here must be considered in the specific context of your organization, that really there is no right answer. But that said, when times are tough, it's important to consider what can be done to minimize the overall impact to the organization and to your team. We've seen many strategies over the years that can be a win-win situation for all. And some of them are to think about reducing the work week to a 4-day week in less busy times of the year. Think about half days that you could introduce in the summer. These can be quite effective. Or think about adding an additional day to every long weekend over the summer period. These would have a minimal impact to each team member's salary, but the overall savings to the organization can be meaningful. Other measures that you could consider are temporary salary reductions or foregoing raises. It'll always be helpful to put a realistic but achievable deadline on when these measures will be lifted, so that it'll give some assurance to your employees that this isn't an indefinite arrangement. Are you considering increasing your headcount? You may want to think about hiring contract staff rather than employees instead, because this will allow you more flexibility in the event an economic downturn does arise. And there may be savings related to employee benefits as well, which you wouldn't need to provide to contractors. I would also recommend ensuring that you have vacation policies in place and that you are actually enforcing those vacation policies by requiring employees to use their vacation and not to build up large balances. In the next section, we're going to look at insurance and strategic continuity planning. So of course, with uncertainty comes a greater interest in and a need for insurance as part of your risk management strategies. And we recommend that you consider insurance in these 4 specific areas for your organization. So business interruption insurance. So unforeseen events such as we've seen with the pandemic and the outcome of that could significantly impact the organization's ability to provide services. We're becoming used to the unforeseen and the unusual happening in our environment today. And there certainly could be other events that could impact your organization's ability to deliver services. So this type of insurance is becoming increasingly important. Liability insurance has always been a very important for organizations. And these days, we're seeing increasing exposure to organizations, events that, or occurrences of particular events that may not have been in the public eye in the past are often in the public eye through social media. And so again, liability insurance is always important for an organization. We've seen heightened focus on cyber insurance and cyber attacks, particularly since the pandemic started. And really it's continuing quite unrelented. So cyber insurance is very, very important for organizations of all sizes. We really believe that every organization is vulnerable. So again, you would want to consider cyber insurance to protect yourself against the costs associated with data breaches and other cyber threats. Event cancellation insurance may also be important for you if you are holding particular events as part of your service delivery or for fundraising purposes. If an event did need to be cancelled without, or perhaps at the last minute, the impact on your organization could be quite significant through related costs and also lost revenues. So that's also something we would recommend you take out if those particular events are important to your organization. We do recommend that you review your insurance policies on a regular basis and ensure that you have adequate coverage for the risks associated with this particular operating environment in which you're in. Our next slide deals with strategic continuity planning. A robust risk assessment and risk management process is very important for all the organizations. It typically involves executive management, and ultimate responsibility lies with the board of directors. It's an iterative process of assessing what can go wrong and putting processes and plans in place to reduce the impact of the risks to your organization. We recommend identifying your organization's critical functions. So these are the functions that must continue even during a crisis to ensure that the organization can achieve its mission. Critical functions may include fundraising, program delivery, financial management, and communication with stakeholders. Your services may be in high demand in a crisis period. Developing a continuity plan is essential. So think about how the organization will continue to operate during downtimes. Based on the assessment of risks and critical functions, the organization should develop strategies to ensure continuity of operations during this period of uncertainty. The strategies may include developing remote work policies, implementing technology solutions, and establishing partnerships with other organizations. Very importantly, remember to communicate to your stakeholders, including your employees. Organizations should establish procedures for implementing their continuity strategies. These procedures should be documented and communicated to staff, volunteers, and stakeholders. Organizations should test their continuity plan regularly to ensure that it's effective and to identify areas that need improvement. This testing may include simulated crisis scenarios as well. So that includes our presentation. And Christine and I would be very pleased to take any questions that are coming in. So Christine, I'm going to hand over to you.
Thanks, Shirley. That was fantastic. I have been reading through some questions as you've been speaking, and I'm going to go with one question that a couple of different people asked. They're related questions. What is the ideal cash in bank? So if we're talking about things like cash burn or how much cash should we keep, one person had said, would love to know your viewpoint that funders allow on average no more than 3 months operating. Has COVID not taught the funders this lesson? What would you say? Oftentimes I will say 3 to 6 months. I'd love to hear your take on this, Shirley. What is the ideal cash in bank for future cash?
Right. And again, I think it depends on the risk appetite, I think, of the organization as well. I would certainly be leaning more towards the 6 months cash in the bank. And that would be within the context of an organization where you have a fairly high level of certainty associated with the revenue streams that you're going to receive. If you're only looking out 6 months out, but you really didn't have an idea of what the next 6 months were going to be looking like, and that there could be a potential for a significant decline in revenues, then I'd probably want to be looking at perhaps even an even longer period than that.
That's a great answer. Let me just see. There was one comment when you were talking about personnel costs, and we were talking about reducing work weeks, etc. One person had sort of raised a good point in saying, you really want to make sure you comply with the Employee Standards Act to mitigate any risks. Of course, you would want to make sure that you're consulting ESA before you make those decisions.
Absolutely. And I would say that if there's any uncertainty associated with the actions that you're considering taking, that you do consult with your legal counsel. And, most law firms will have somebody with expertise in the area of employment law. And of course, that can vary. But typically, there's different legislation in the different provinces in Canada. So you'd want to make sure that you are consulting with somebody who has expertise in the particular provinces that you're operating in.
Now, this question, I would love it if we had the answer, Shirley, but I'm pretty sure we don't. When might we expect interest rates to begin to drop?
Yes, indeed. I think we all really want that crystal ball. I did have the opportunity actually to send some economic updates webinars earlier this year. And the anticipation of really all of the major economists at that time, and we're looking back about 2 months ago now, was the expectation that interest rates would be declining fairly gradually over about a 2-year period. So by the end of 2024, the economists were forecasting that the inflation would be coming down to a level of 2 to 2.5%, which is really where the Bank of Canada is wanting that rate of inflation to be. And then, of course, interest rates would then accordingly come down as well. Whether they'll be as low as what we were seeing, before we were in this period of heightened inflation, I don't know. But that is really our hope. I'm certainly not an economist. There was certainly no views expressed that we'd be looking at a period any sooner than December 2024.
Absolutely. One of the questions here, it's a great question, is the recommendation of 3 to 6 months or more of cash saved in the bank different from having reserves? My take on this is it depends on if your reserves are restricted or not. So when we're talking about putting cash aside, you really want to make sure that if it's earmarked for something restricted, then that's not the same as just having cash saved in an investment or the bank. Would you agree, Shirley?
Yes, I think there's some not-for-profits that want to create that sort of rainy day reserve. And so they'll transfer amounts from their unrestricted net assets into that particular reserve. Sometimes it's called a contingency reserve. It's whatever you are calling it. Now, some organizations will also choose to create a separate bank account and move the funds into that bank account, so they really cannot be touched. So I see varying practices in that regard. And it really just depends on the preference of the board. It's typically the board that's making that decision.
This is a pretty common question as well, and it really comes down to the specific funders. I think nonprofits across the board are really feeling different funders have different recommendations. So they're talking about United Way recommending only 3 months of reserve. Some funders require 6 months of reserve. Is there any risk to having a high level of reserve funds with respect to funding eligibility as a not-for-profit agency?
There could be. I'm aware of one organization in British Columbia that does provide grants, and they will typically look very closely at unrestricted net assets and those rainy day reserve funds in terms of making their decision, because they will generally sort of sweep the rainy day monies into the unrestricted category. So I think it's important to understand how the different organizations providing grants base their decisions, and perhaps taking that into consideration as well. But really, it comes down to a bigger issue than I think just that could be, and it's really making sure, nonetheless, that you're setting aside the amount of funding that you should be for your organization and the particular risks that your organization is exposed to.
Absolutely. So one person here is saying, suggest some avenues to earn interest income on a short-term commitment or daily products, as GICs are long-term and often not cashable. Any suggestions?
I've noticed some success with some of our clients and some of the organizations that I'm connected in, where GICs are cashable, and that's often producing a really good interest revenue stream for those organizations. The rates have generally been between 3 and 3.5%. I do know of one organization that had negotiated terms to earn interest on their operating bank accounts as well. And so think about that. I often say, if you don't ask, you don't get. So it may be a really good time for you to approach the financial institution that you bank with and see what they can offer you, particularly if you do hold perhaps real estate properties where you've got mortgages with those and other products with that financial institution. You've got some leverage there to negotiate some terms, that more favorable terms for yourselves.
And that can include fees as well. Yeah. Negotiating all of that at once.
Absolutely.
Yeah. And we've seen some really great offerings by banks that recognize nonprofits and charities and provide those rates, both interest rates for investments and your fees, your bank fees.
Right.
All right, let's just see. I'm going to go back to one of the original questions here from about a half an hour ago. Shouldn't a budget be based on a cash flow forecast? In other words, the annual budget would be the forecasted year-end view of the cash flow forecast. However, tracking the budget typically assumes linear revenue and expense streams. For example, during the year, monitoring the budget could be misleading since it's not based on cash flow, which is driven. This is a good question because I see a forecast as a combination of your budget and your cash flow working together. It's those actuals versus what we're projecting married together. Shirley, do you have a different way of describing that? We really do use these together, not separately.
I like to see a budget that's prepared on an accrual basis, but also accompanying that a budget, a separate cash flow forecast. And the reason why I like a budget to be prepared on an accrual basis is because that's the basis of accounting that you're using in processing your transactions and preparing your actual financial statements. And organizations typically want to compare their actual revenues and expenses to those budgeted revenue and expenses. So if they're prepared on different bases, they're not going to be comparable in any meaningful way. But preparing a cash flow forecast for the year in addition to the budget is really helpful. It can anticipate the timing of those cash flows, because typically those cash flows aren't coming in equal amounts each month. You may have that set up under certain funding arrangements, but often they come in, it could be the majority up front for the year, perhaps a holdback towards the end, or really in an irregular pattern during the year. But it'll also help you to anticipate and manage months when you're receiving a lower cash amount than other months when you're receiving those larger funding receipts.
I like that. And it's true, the accrual basis is the way that we like to see budgets. Now there's a question here, and I think it's fair. How is outsourcing non-core functions and using volunteers versus paid employees going to help with rising unemployment rates?
Well, I think the good news is that the organizations that you're outsourcing to also need to employ people, such as Christine and myself. But it gives you an opportunity really to be able to save costs, because, for example, you may not need to be hiring, let's say, an IT manager or a bookkeeper on a full-time basis within your organization. But by outsourcing, you can be streamlining those costs. So that is helpful.
Now, on the subject of costs, there is a question, and I truthfully don't have the answer to this one, so we'll see if Shirley does. I believe the federal government mandated lower credit card fees for smaller businesses. Do you know if this has been implemented, or do you have any further details? These costs can really add up, and can they ever? Especially credit card versus debit even. And then the premium cards. I was just talking to a business owner yesterday who was talking about the more premium the credit card, the higher the fees. And so these credit card companies are giving rewards to the end user, which it is the agencies that are paying for that, or companies are ending up paying for those rewards because the fees are higher based on the premium of the card. So do you have any intel on whether or not there's going to be lower credit card fees for small businesses?
Unfortunately, I don't. I'm very pleased to hear that, though. That's really good news, and I hope that will extend to not-for-profit organizations as well. But we can look into it and get back to you on that question.
I love this question because I love our partnership here with Charity Village. The question is, do you have any suggested resources for available grants for NPOs? One thing that I can say is on LinkedIn, I follow Charity Village, and they're constantly posting about resources available for grants for nonprofits. I try to share as many as I can on my LinkedIn page, but there are some websites that can help you find specific resources as well, depending on the project that you're looking to fund. There might be some capital funds available. It might be specific to your region. So there might be something that's available in Ontario here that may not be available in BC or vice versa. But I do find actually that I've seen a lot of information in the last few weeks from Charity Village directly. So I would say they're a great resource. Shirley, do you know of any other resources that are great for NPOs finding grants?
I don't specifically know. I think that may be a base source. There are, of course, some very well-known sources, such as British Columbia with the BC Gaming Grant. But again, it's something that a Google search also may help you with.
Yep. Now, this one says total newbie question. Is it possible to switch operating reserve funds? So these would be unrestricted funds to a savings account to generate interest, or would something like a term deposit be more typical? I've seen both. I think what you need to mitigate is risk, and when you can turn that cash or turn that into cash when you need it. So what is the terms of the investment? How long is the cash tied up? And are there any risks involved? Mm-hmm. Shirley?
Yes, I would agree. I would be leaning in more towards a cashable GIC if that's available to you. Typically, you may be locked in, the monies may be locked in for a 30 or 60-day period, but then after that, you should have access to it, as opposed to tying up the money for a longer period and a term deposit, as Christine said. The GIC would normally be earning you a higher interest rate than a regular savings account.
Emily has jumped in graciously to let everyone know that Grant Connect database is a great resource to access grants. So wonderful. Thank you very much for that. Hopefully that's helpful to everyone that's here. On the topic of insurance that was covered in today's webinar, someone is just reminding everyone to make sure that your volunteers are covered under your insurance policy and they have set guidelines for what they can do. Just having really good policies around that as well is always advisable. That's great advice. Thank you.
Perfect. Yes.
And just to remind everyone, we are going to spend the next few minutes still answering your questions. So please feel free to send them along. We are willing to go past the time here to make sure that we answer as many as we can. If we don't get to your questions today, please ensure that in the Q&A box, you put your email address, which gives us permission to send you any of the unanswered questions from today's webinar. All right. So we've answered that. Great. Typically, NGOs seem rather risk averse when it comes to investments of excess funds, going usually for GICs and other safe forms of investment vehicles. Mm-hmm. Nowadays, many people would go to invest their excess funds in low-cost ETFs. In your view, should NGOs consider such vehicles? And if so, how best would you think the argument should be framed for presentation to the board? It's a great question.
Mm-hmm. Mm-hmm.
I think.
Sorry, Christine, you go ahead.
I was going to say I think a lot of this is along the lines of what we've been talking about. I think your own decision making on where you want to invest really comes down to your cash flow forecast. When do you need to be able to liquefy that cash? Liquefy simply means it turns into cash that you can spend. And so whether it's a GIC, which is more safe, you really do need to mitigate risk. Sometimes having a financial advisor is a good plan, depending on the amount of cash that you're dealing with. So we do see some nonprofits that have over $1 million of unrestricted cash. What do you do with that? Well, that again, you would want to mitigate risk versus reward, as well as when you need to be able to use that cash. So it's those same questions that were being asked. And I think you need to do what's best for your agency and your cash flow. And we do see a lot of GICs in the nonprofit sector. And you're right. I think people generally tend to gravitate towards what's safe and accessible.
Mm-hmm. Yeah. Christine, perhaps I can just add to that. Some organizations may have received endowment funds and be investing those in equities and bonds and other fixed income securities as well. Some of them may include ETFs too. So it really depends on your own particular organization, what funds you've received, and how that sort of window of time when you actually can tie up some monies, and you know with really a high level of certainty that you're not going to need to access those funds, perhaps within the framework of a time frame of a number of years. Because if you are taking on more risk, you obviously are going to experience more market volatility, and you really don't want to be incurring losses on those investments.
I see just a couple of questions here. And with this, we'll probably wrap up. Unless you have another question, please feel free to send that along. We do see them quite quickly here. Is there any indication that the government of Canada may defer repayment of the CEBA loans for charities or forgive the loans in full? Given the tough economic times, repaying the loan might be a challenge. Absolutely understand that.
Mm-hmm.
I haven't heard anything. Have you heard anything, Shirley?
I have not. Definitely hearing noise about it in the marketplace, and it's not only affecting any not-for-profit organizations that may have been able to take advantage of this loan, but certainly small businesses and are really, I think, going to be lobbying for this. But certainly I haven't heard any announcements being made by the federal government.
And this last question here, I think is something that we've already answered. Are there any ways, are there any other revenue streams, not interest-based, but some kind of stocks or ETFs?
Mm-hmm. Yes, I think I did respond to that question. So I'm hoping that that answers the question.
Well, this takes us just right past the hour. We really, really hope that you have found today's webinar helpful. We want to thank Charity Village for helping us host. Shirley, thank you so much for co-hosting with me as well. And please feel free to reach out to any of us at ENCOL. Our email addresses are there on the side. You can see our LinkedIn. Feel free to connect with us there. And again, please put your email address in the Q&A box if you'd like to receive the questions after the webinar. Thank you so much.
Wonderful. Thank you so much, Christine and Shirley. Really, really appreciate the presentation today. I just want to, before we wrap up, remind everyone as well that you'll get the follow-up email probably tomorrow morning with a link to the webinar recording. Please do feel free to share that link with your colleagues. The presentation, the slide deck, all of that will be there and it's all publicly available. The email will also include a survey link you can fill out with your feedback on today's webinar, but you should also see a survey link pop up right here in Zoom following the session as well. So please do share your feedback there. We'll be sure to pass that along to Christine and Shirley and the team at ENCOL as well. On behalf of Charity Village, thank you again so much for joining us today. I hope we'll see you at our next free webinar that's coming up in June with Canada Helps. You can find more information on that and all of our upcoming webinars at charityvillage.com/webinars. Thanks again for taking part in today's session, and I want to wish all of you a wonderful rest of your day. Take care and bye-bye.